don't understand.
Hi, good morning, everybody. Good morning on today's edition of Money Market Review. All right, my name is Oluwafemi, and I'm going to be your own host for today. And we'll actually be starting the class in a few minutes' time. I just want improved participation, and I want one or two people to actually join us so that we won't have to go over some of those things which we would actually be discussing. So in few minutes time, we'll be starting exactly by 8:07. I'm going to be starting the class. So I would actually be waiting for others to join us, and by 8:07, we'll start the class for today. All right, thank you. All right. Good morning, good morning, good morning. Just like I said, we'll actually be starting. All right. My name is Oluwafemi, and I'm going to be your own host for today. All right. While I share my screen, as part of what I do, I would love to take us back into what's actually happening in the market, as well as one of the dominant films, or what has actually been happening in the market for quite some times. And as a way of taking us back, you'd clearly see that the market is actually a very dynamic one. And when I mean the market is very dynamic, what I'm actually saying is that at different times, as well as different levels, we get to see different things that actually shapes the course of the market, and we get to see these things affect the behavioral pattern of prices. And over time, markets would learn how to actually cope with the demand and supply, as well as the theatrics of some of these things. And it tends to lead us to some other things which would happen in the market. And as such, it is right to say that the market is an evolving market. Market is actually an evolving market, in the sense that whatever would make the market move today might not make it move tomorrow. And that's why you as a person should be a lifelong reader, all right, so that you can know what has actually affected the market in time past, as well as what could affect it right now. Now, before now, we tend to have what we call Russia-Ukraine crisis, of which this Russia-Ukraine crisis actually held the world to a kind of stage whereby it brought about supply disruptions, energy crashing, increase in price of food and the likes. And presently now, what we're actually having, or the phase which we have, is the face of the Israel-Palestine war. And I believe that a lot of us would have actually been following what's been happening to Israel, as well as what's been happening to Palestine. And as such, if you look at what's been happening to Israel and Palestine, you'd see that this has actually affected the prices of oil. Aside from the fact that it has affected prices of oil, it has also affected the prices of um, gold. Yes, it has affected the prices of gold. And aside from the fact that this has affected prices of gold, we can also see uncertainties in regards to stocks, also uncertainties in regards to stocks. And if you read and you go to Forex Factory as well as several other articles which you could actually lay your hands on, you'd see that at one point in time or the other, all these things actually point to the fact that, oh, fine, there's actually a war within how do I call it now? Israel, Palestine, the area called Gaza, the Rafah area, and the likes. And all these are actually shaping the world at the moment. All right. And what you as a person should actually look out for is the correlations. How it does affect whatever instrument which you as a person tends to trade. All right, look at the correlations. How does this affect the instruments you as a person intends to trade and the likes? That's how you get to know how to how this would shape what you are actually doing. So for today, we'll start by looking at the Forex factory and looking at some of the events which would definitely shape the market for today. That's talking about the fundamental events. And for today, earlier as of today, we had different news for GBP, which is called Rick's House Price Balance. And aside that, we looked at average cash earnings and Bank of Japan summary of opinions. And if you've looked at this average cash earnings, you'd tend to see why Japanese yen has actually been losing much of its strength, getting to almost 32 years low at the moment. All right, then for by 4:06 a.m. we had the Canadian yen, and we actually saw that for the Canadian yen, we had what we call USD dominated trade balance as well as their own trade balance. And as a way of saying it, when we talk about trade balance, what trade balance seeks to actually achieve is to look at how much a country imports or than it actually exports. And normally, if your country is meant to be a very good country, you should actually export more than you should actually import. But for the case of Chinese yuan, we actually did saw that they actually imported more than they should have actually exported, which gives them a very bad one. All right, it gives them a very bad one. And when we talk about this trade balance, don't look at it from the angle of, oh, they only exported more, they didn't import, they imported more, they didn't export more. So how does that correlate? Now, if you are to look at that correlation, China itself is the largest importer of crude oil. The largest user of crude oil in the whole world is actually China. And if China, who happens to be the largest user of crude oil, is now importing more than normally what they should actually export, it tells us of the fact that activities in the manufacturing sector is nothing to write home about. It means what they could have actually produced in their own area, suffice to say, to now start exporting it to different areas. It means they could not produce it locally. Then they now have to actually bring it from outside, which gives them a negative trade balance. I believe we can actually hear this now. So that's a bad news for them. All right, and for CHF, all day as well as for the Eurozone, we are going to be having what we call bank holidays, French bank holiday, German bank holiday, and so to say, we might not see more of a very good activity from their side because most of the paraphernalia that makes up a very good economy are actually shut down. All right. Then the ones to come, we have by 12 p.m. we are going to be having Bank of England monetary policy report, monetary policy summary, as well as MPC official bank rate votes. Then we have official bank rates, and by 12:30 we are going to be having Bank of England Governor Bailey speaking, and by 1:30 we are going to be moving to USD, where we have their unemployment claims. And I was speaking with a client of mine yesterday, and he raised the concern to say that most times he looks at what the actual is in terms of color. He looks at what the actual is in terms of color, and for him, he believes that once the color is green, definitely it would boost whatever currency that news is actually coming out for. And I say to him that no, it's not all the time. For the fact that something is green does not signify that it's going to be very, very good for that particular currency. Now, how do you as a person mitigate doing this? Now, if you look at my system, you'd see that every instrument which you have here has an envelope to its side. Can you see? Now, every instrument has an envelope to its side. The first thing you as a person should do before that news is actually being released is to click on this particular envelope. Now, when you click on this particular envelope, it gives you the same way you have it here now. It gives you this same way. Now, you have three things. Three things you as a person needs to look out for. One is what we call measure. What that measure tends to do is that it tells you, fine, this particular news that you are looking at, what does this news, what does it tend to achieve? What is it measuring? You need to have that first. Now, unemployment claims, what does it seem to measure? It seems to measure the number of individuals who fight for unemployment insurance for the first time during the past week, meaning people who are jobless that are actually telling government that, oh, for this particular week, oh, I'm jobless, so government give me money, I need to actually use this money. That is what jobless claims. That is what it looks out for. Now, the usual effect now says actual less than forecast is good for currency. Actual less than forecast is good for currency. Now, let me give you a scenario so that you can actually understand how some of these things actually works. As a father, you give birth to, let's say, 12 children. And out of that 12 children, 11 are actually saying, Daddy, I'm jobless. Do you think that father will be healthy? You will not be healthy as a father. You know why? All your money, all your investment, everything which you've ever had, you need to actually give them back so that they can sustain themselves. Because inability for those children to actually sustain themselves means you will crash. They will come home, sell your TV, come home, take your food, come home, do a lot of things. Why? Because they are actually jobless. But take for an example, let's say as a father, you have 12 children, 11 have their job and a well-paying job. You as a father, I can tell you that you enjoy it more. You know why? You get a lot from all the, let's say at the end of the month, they say, Daddy will take, oh, Daddy will take, oh, Mommy will take, oh. You know why? Because they're actually getting their jobs. Which means if a lot of people are actually jobless, once a lot of people are jobless, it adds up to what you call government expenditure, because government will need to pay them. All right. But by the time a lot of people get job, by the time they get that job, they pay their taxes to government, and this actually adds to the money government will have. Can you see the difference now? That's why you have this that says that actual less than forecast is good for currency. So you need to actually look at the effect of that particular news. So you have it at the back of your mind. Oh, fine. So what this actually means is that if a lot of people are not jobless, if a lot of people actually have a very good job, definitely government would actually do so well, because you pay your tax, you do this, you do that, and at the end, government will have much more money to actually cater for other citizens and do capital projects as well as other things in the economy. All right. That aside, then why traders care? You need to also read this why traders care. Don't forget three things. The first thing is what does it seem to measure? The second thing is the usual effects which is going to have. Why the third thing is why traders care. Now, although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health. Can you see this now? Is an important signal of overall economic health because consumer spending is highly correlated with labor market conditions. If you are working and you actually have good, let's say you get a very good paying job, definitely you would buy something that would say, oh, let's say you buy a car, you buy your necessities, of which those purchases you're actually making, it makes money for those. So money circulates. But if you don't have money, you don't have something to spend. People will even have their jobs. People have those goods. Those goods will just be lying fallow in their stores, doing nothing. Can you see this now? All right. So that news is going to be coming out by 1:30. And for Canadian dollar, we are going to be having Bank of Canada Financial System Review. And tentatively, we have a mortgage delinquencies for USD. And by 3:30, we have natural gas storage. Now, let me explain this also as a way of explanation. Natural gas storage. Now, let's see this now. The measure, I've opened it now. The measure, it says change in the number of cubic feet of natural gas held in underground storage during the past week. Now, what's the usual effect for this one? It says actual less than forecast is what is good for currency. Now, let me explain this now. Natural gas storage. Take yourself or take this scenario. You as a person, you have a filling station. When you have a filling station, the lesser the petrol you have in your filling station, the more money you as a person will have. You know why? It tells us of the fact that, oh, fine, people are actually buying your petrol, they are buying your kerosene, they are buying your gas and the likes. So the lesser, take for example, you offloaded 33,000 liters. When you do your own measuring, the lesser you have in your storage, the more money you have in your account, because it tells us of the fact that, oh, people are actually buying your crude oil, they are buying your gas, they are buying your kerosene, they are buying your diesel. Then the more they buy, the more you likely go outside to say, oh, let me go and purchase again from NNPC, let me come and offload. The more you purchase again, so it tells us the fact that you're actually making profit. But if you look at your natural gas storage or you look at oil inventory, and you see that the oil inventories you have is just getting high, it's getting high. It tells us of the fact that people are not even buying your petrol again. That's what it means. Are you getting it now? So I believe you're actually learning. All right. So this is going to be coming out by 3:30. And for Canada, we have Bank of Canada Governor Macklem speaking. And we have GBP MPC member Phil speaking. And by 6:01, we have 30-year bond auction. And by 7 p.m., we have FOMC member Dali speaking. And by 11:30, we have New Zealand dollar business New Zealand manufacturing index. All right. Now, aside from this, let's look at some of the news which we've actually had for some couple of hours. Now, US economic updates, to cut or to hold, that is the question. That's to cut interest rates or to actually sustain their own interest rate. So you have this, if you have time, you can actually go through this and read this too. Now, US inflation could take longer to reach the Fed's 2% target. This is just to tell us of the inflation rate which they want to actually achieve. They want to actually contain their own inflation to a 2%. All right, they want to contain their inflation to 2%. All right. Now, interest rate update on May 2024. This is talking about Reserve Bank of Australia's decision, RBA, Reserve Bank of Australia. All right, World Bank expands leadership in USD. All right, with second transaction, you have this. Then bond yields and black gold ounce as Hawkish Fed speaks low stocks. All right, vicious circle between wages and prices and Bank of Japan's monetary policy. Then you also have Japan's finance minister Suzuki, rapid FX moves undesirable. All right, Japan real wages fall in March, marking 2 years of the decline. These are other news which you have in the market. If you have your time, take time to actually read some of this news. Now, let's go to what we have, what the markets are for us for today, while I share my screen. All right, so today I'm going to be starting first with dollar index. All right, so for dollar index, you'd actually see that for last week we had dollar collapsing. We had the dollar collapsing last week. You can actually see that dollar fell from this area down to this area before it actually did went up. It fell from this area down to this area before it did went up. All right, so for today, all right, for today, we're actually expecting that dollar should continue its rise. All right, I'm actually expecting that dollar should actually continue its rise for today. And by way of what we call smart money concept, you can actually see an external liquidity here. there's actually an external liquidity here, which I'm actually expecting that price would actually come to this particular area to test this external liquidity while it forms what we call a double top. Can you see? Now, price will come here, it will come to this particular area to test this external liquidity while it forms what you call a double top. We are expecting price to actually form what you call a double top at this area. And by the time price actually rises up to this particular area, we expect the dollar index to actually do more of a buy and actually for it to actually strengthen dollar. So news on dollars, we have focus on fresh inflation data, just like we did read on Forex Factory. It's just for you to scroll your Forex Factory to the downward side to see some of those particular news. Focus on fresh inflation data. We are going to that's what the market is actually looking up to. Then aside that too, before now we happen to see dollar talking about cutting of interest rates. They want to actually cut their interest rates, but from the news which we did saw last week, that was when Jerome Powell, when he did had some meetings, he actually did reiterated the fact that dollar has actually bounced back. And aside from the fact that dollar did bounced back, they are now looking at increasing their own interest rates rather than cutting the interest rates. They're actually looking at increasing the interest rates rather than cutting the interest rate. And once they actually increase this interest rate, of course, we actually tend to see some level of balance in the market, which this would definitely affect how the market behaves. Then aside that too, we also saw news saying that U.S. economic is actually outperforming. Their economy is actually outperforming at the moment. Then aside that too, we had a softer than expected NFP. That was last week, and this softer than expected NFP actually gave rise to a weaker dollar. But of course, they have actually bounced off all those things which we've actually seen. So for today, the first instrument I'm going to be analyzing is the Euro USD. The first instrument we are going to be looking at for today is Euro USD. Now for this, I'm actually on a 30 minutes time frame, and on 30 minutes we can actually see that this particular market has formed what we call a double bottom. It has formed what we call a double bottom. Can you see where market got rejected here? It has formed a double bottom, and we can actually saw that the liquidity which we have here, market has actually taken that liquidity, and I'm actually expecting that there would be a push up for price at this particular level. But let me look at it on a smaller time frame to see what a market would likely do. So on 15 minutes time frame, you can actually see that on 15 minutes time frame too, market is actually at that liquidity. So for a sell on Euro USD for today, I will expect that once price breaks below this area of liquidity, yes, you can actually enter for a sell. Once price breaks below this area of liquidity, you can also see it that on 1 hour time frame that there is actually a verified support. So once price breaks below this verified support, we can actually enter for a sell while we take our profit at we can enter for a sell at price level 1.07304, price level 1.07304, price level 1.07304, while I'll take our profit at price level 1.07235. Euro USD, I take that again. You can enter for a buy at price level 1.07419, while you take your profit at price level 1.07491. All right. Why you take your profit for the sell, you enter at 1.07304, then you take your profit at price level 1.07235. All right. Now, if you look at this on a smaller time frame, you can actually see that market would get to that place and will give it a very necessary gap. All right. So you can actually enter that for Euro USD. Now for GBP USD, looking at GBP USD, also on GBP USD, we can actually see that market is actually sitting on a proven support also on 30 minutes time frame. But let's go to 1 hour time frame to see what we have now. On 1 hour time frame, I'm actually expecting that price would come down here. So we can actually enter for a sell at price level 1.24723, 1.24723, while we take our profits at price level 1.24651. GBP USD. You can take a buy at 1.24828, while you take your profit at 1.24920. Then for a sell, can enter for a sell at 1.24723, while you take your profit at 1.24635. All right, let's look at this on a smaller time frame. So on 15 minutes time frame, let's look at our entry. So on 15 minutes time frame, you can actually see that there is also a proven support. So you can actually enter if price is able to break that proven support. You can actually enter for a favorable sell. You can actually see that too on 15 minutes time frame. Now to USD JPY, looking at USD JPY, I did said earlier on that USD JPY has actually been weak, and aside from the fact that it's been weak, there has been a lot of a lot of speculations from Bank of Japan. There has been a lot of speculations from Bank of Japan, and these speculations has actually been killing their own markets. They couple with the fact that there are different issues as regards interest rate from this particular economy, and they're actually looking at boosting their own economy also. But at the other end of it too, for the fact that they're actually being paired with dollar is not really joking at the moment. Of course, we've actually seen different news which the dollar asked for itself for today, and aside that too, we've actually seen that all news is actually looking at CPI that is to come out next, and it's from this area that we'll get to see different news on inflation, how they've actually been able to curtail inflation in that area. Then aside this too, we tend to also look at their own interest rate. And looking at this, we can actually see that the market is actually recuperating, in the sense that dollar has actually been gaining a lot of strength. Dollar has actually been gaining a lot of strength. Now, looking at this particular market on a lower time frame, you might want to enter for a buy. Enter for a buy on this particular instrument at price level USD JPY. Enter for a buy at 155.867, 155.867, while you take your profit at 156.123, 155.867, while you take your profit at 156.123. Alternatively, for a sell, enter at 155.622, while you take your profit at 155.371, 155.622, while you take your profit at 155.371. USD CAD, USD CAD. Now, looking at USD CAD, we can actually see that early last week when we had some level of gains in oil, markets did moved in favor of the Canadian dollar, and we also saw that they also did gain some level of momentum in the market. But further this week, we've actually seen that the war, as well as the tension in the Middle Eastern region, has actually been affecting the way which oil, as well as oil has actually been doing, and we can also see the rub-off effect on the Canadian dollar, as well as their own economy. And for most part of this particular week, we've actually seen that USD has actually been gaining some level of strength, just as I've said earlier on, and we can also see that Canadian dollar has actually been losing some level of strength. So for today, I actually did expect the market to also move more in favor of the of US dollar, and coupled with the fact that most of the news we have for today are more likely to be in favor of the dollar. Are more likely to be in favor of the dollar. So we can actually enter at this particular price, but this is on a 1 hour time frame. Let's look at it on a smaller time frame, and to give it a befitting entry. All right, so on a smaller time frame, which is 15 minutes, yes, we can actually give it a very befitting entry as well as exit. Now for today on USD CAD, for today on USD CAD, enter for a buy at price level 1.37382, while you take your profit at price level 1.37467. 1.37382, while you take your profit at price level 1.37467. Alternatively, for a sell, enter for a sell at price level 1.37291, 1.37291, while you take your profit at price level 1.37203, 1.37203. That's that for USD CAD for today. All right, let's look at NZD USD. NZD USD. Now for NZD USD, we can also see the behavior that NZD has actually been gaining some level of strength also, and for most part of this week, dollar has not really been able to beat NZD hands down. And just like I do tell every of my clients, when you look at the behavioral pattern of NZD, it moves the exact way GBP moves, and this is just because we have the same person ruling GBP. It extends its own reign to Australia as well as New Zealand. And if you look at Australia's flag as well as New Zealand flag, you always see that there is the flag of Great Britain pounds. Great Britain, you also see their flag embedded into the flags of New Zealand as well as AUD. That's why most of the times they have the same scenario, and they move the same way. All right, for USD, we actually have them doing a lot, but of course, just like I said, we can actually say that if you look at majority of what the market has actually been able to do for this week in terms of this instruments, it has not been I can actually say the market is just trying to have a breakout. It has just been consolidating. It has just been consolidating. Now for today on this particular instrument, let's take a entry on 1 hour while we just check it out on a lower time frame. All right, we just check it out on lower time frame. All right, yes, why would take profit at this? So looking at this instrument on a smaller time frame, looking at this on a smaller time frame, we can enter for NZD USD. All right, a buy for NZD USD at price 0.59999, 0.59999, while you take your profit at price level 0.60066. A buy for NZD-USD at price level 0.59999. Why you can actually enter for a sell at price level 0.59901. 0.59901. Why you take your profit at 0.59827. 0.59827. 0.59827. 0.59827. 0.59827. All right. Now, lastly, for currencies, let me do GBP CAD. Looking at the GBP CAD, we've actually seen that there has actually been a lot of activities from GBP CAD, not just this week, but over the last couple of weeks. And this is due to the fact that there has been a lot of activities also on GBP itself. And if you look at the Forex Factory, hardly will you see a day without seeing a very good news from the GBP. All right. And if you look at Canadian dollars too, there has been a lot of activities in as much as we still have this Middle Eastern tension, as well as diversity in what oil is doing, demand and supply disruptions, and missing of quotas and the likes. Definitely would definitely see this particular instrument move. And from what I'm actually looking at on this particular chart, from what I'm actually looking at on this particular chart, I'm actually envisaging that GBP CAD, this is where GBP CAD is actually coming to. You can see this liquidity here. It's coming to fill this order here. It's coming to fill this liquidity here. How soon it's going to be, I don't know, but this is where I'm actually expecting markets to actually come to next. And once market comes to this particular place, you can actually enter for a direct buy at this particular region. But of course, we need to look at intraday positions, what we could actually get intraday. Now, for today on intraday, we can actually look at, I would rather say, let me enter below this region because of this particular candle which I'm actually seeing here. I'd rather enter below this region because of this particular candle while I take my profit before it gets to this particular area. Then alternatively, I would enter for a buy here while I take my profits at this particular region. But let me look at this on a smaller time frame to see what the market is doing. Now, on a smaller time frame, can you also see that there is also an untested support at this region? That's why I actually wanted to, take my sell once price is able to actually break this particular untested support. So what I would rather advise that you do for today is to enter for a buy on this particular instrument at price level 1.71341. 1.71341, while you take your profit at price level 1.71412. 1.71412. All right. Then by way of sell, you can actually enter for a sell at price level 1.71214. 1.71214, while you take your profit at price level 1.71138. 1.71138. 1.71138. All right, that's that for GBP CAD. All right, so let's go to oil. Let's go to oil. Oil is one of my favorite instruments to actually analyze. If you look at what oil has actually been doing for most part of last week, at least we could actually see from this region where we had this gap down to yesterday, market has actually been doing more of a sell. Market has actually been doing more of a sell. It has been doing more of a sell. And if you look at what market has been doing, let's look at what oil has actually been doing now. Firstly, oil is actually a fundamental instrument. So before you want to trade oil, you want to make sure you get your facts and figures right. What is actually affecting the market, because all this could give you an heads up on what oil would likely do. Now, for the news which we actually have, you have what we call mixed China cues, of which from this mixed China cues, it actually tells us of the fact that China is actually the largest crude oil importer, in the sense that they actually take more of crude oil, the largest crude oil importer. And if you look at the demand for demand of oil from China, it's actually cooling down, in the sense that they're actually not importing more. And from the news which I actually have, it actually says that China's oil imports fell to 44.7 million tons from 49.1 million tons. It actually fell to 44.7 million tons. So it actually tells us of the fact that there is a lot of shortage from their own. They are not really demanding for much oil. So the problem is not about the supply of oil now, it's about the demand for oil. So China is not really demanding for oil, and this actually tells us of the fact that a lot of data from China is actually very, very bad. Although there might actually be a rise, in the sense that we are going to be having what we call labor holiday, of which this labor holiday, you actually expect a lot of people to actually kickstart their vehicles that they've parked for long, for them to actually move about, and this might actually lead to a rise in the demand of oil. Then also I said it earlier on that we had import surge in China, in the sense that if you look at the trade balance that actually came out, we had a disappointing data from the trade balance, in the sense that a lot of people, China that is meant to actually export more is actually importing more. So it's actually telling us of a disappointing data. Then also we have what we call weaker energy demand. There has actually been cases of weaker energy demand in all these areas. Aside from the fact that we have a weaker energy demand, we have signs of the escalation in the Middle Eastern region. There are different signs of the escalation, and Israel is actually saying that there's going to be some level of ceasefire, which I expect that once we have this ceasefire, definitely it would help us in the way oil is actually behaving. So for today on oil, I'm actually expecting that oil should actually push up to this region. Yes, oil should push itself up to this region. So you can actually enter for an instant buy on oil while you take your profit at 84.38. Enter for an instant buy on oil. Enter for an instant buy on oil, and take your profit at 84.38. And if you look at this 84.38 region, can you see that market got rejected at this point? Can you also see that market got rejected at this point? So it's you can enter for an instant buy while you actually take your profit at this particular point where market will actually get itself rejected. And alternatively, for a sell on oil, you can enter for a sell at price level 83.62, while you take your profit at 83.25. 83.62, then you take your profit at 83.25. Let me look at this on a smaller time frame. Perfect. 83.62, while you take your profit at 83.25. All right. I believe my audio is fine. If you cannot hear me, kindly check from your own end. If you cannot hear me, kindly check from your own end. All right. I believe others can hear me. If you can hear me, just say yes so I can continue. All right. Now, moving forward now, I would look at copper and also look at gold together. I'll look at copper and also look at gold together. Copper as well as gold. Now, I actually did move to copper because majorly I've actually seen that the dynamics of gold is actually changing, and for most clients, if you are somebody who tends to actually trade gold very well, you'd see that gold has gotten to a level whereby it doesn't even respect fundamentals, it doesn't even respect technicals anymore, and as a way of such, for traders, if you don't want to keep losing money, you have to also look at maybe another instrument could actually compete in that state. And for most times, if you've been following my trade signals, you'll see that for the past weeks, I've actually switched to copper. All right, and for copper, at least it has actually been doing justice to every of what we actually intend for it to do. It has actually been doing justice. So for today on copper, you can actually enter for a buy on copper at price level 98.73, 98.73, 98.73. I'll still do gold. Just calm down. 98.73. 98.73. Why you take your profit at 98.98? 98.98. For copper, enter for a buy at 98.73. Why you take your profit at 98.98? 98.98. Then alternatively, for a sell on this same copper, you can enter for a sell at price level 98.47, 98.47, 98.47, 98.47. All right, then take your profit at 98.23, 98.23, 98.23, 98.23. All right, now gold. If you look at gold now, if you look at gold as well as copper, you tend to see the same behavior. You tend to see the same behavior with gold as well as copper. The only thing with copper is just that it doesn't really move fundamentally the same way you have gold reacting to any kind of fundamentals. No, it doesn't really react that way. But when you look at the market movements, the chart patterns and the likes, you tend to see the same thing. All right, for it. All right. So for gold for today, well, talking about news affecting gold, of course, you know that anything that actually affects USD definitely will have an impact on gold. Then aside that too, we have this Middle Eastern tensions. Is that really affecting the way gold is actually behaving? Then also we have different issues as regards interest rate cuts, inflation figures, and the likes. Of course, people see this as safe haven against the dollar index, which is DXY. All right. So for today, you can actually enter for a buy on gold at price level 2311.56, 2311.56, 2311.56, 2311.56, 2311.56. Why you take your profit at 2315.52, 2315.52, 2315.52. All right, then you take your profit for a sell, enter at 2304.00, 2304.00, 2304.00. Then you can actually take your profit at 2300.28, 2300.28, 2300.28. Now, somebody is asking, what time frame is necessary for pending order? There's one thing I tell clients: look for a strategy that will work for you. There's no generally acceptable way for doing some certain things when it comes to this particular market. You'll be the one to actually, you are an authority yourself. Yes, let me put it that way. You are an authority yourself, and for you to become an authority, you become an authority by testing those things. When you test it and it works for you, then you become an authority in that angle. So if I tell you that, oh, fine, 4 hours is the best time, I can actually do my own analysis on 4 hours. I give you an entry point and it will still become a pending order. I can do it on 15 minutes time frame. I'll give you it. So study to show thyself approved. All right. So study this particular thing, build a strategy around it, then you come up with what works for you best. And that's what you can actually give out to people. But when it comes to there's no generally acceptable way for doing some certain things when it comes to this particular market. That aside, then somebody's also asking, where do I get my news? For you go to your Forex Factory, read news on Forex Factory. Aside from you looking at your Forex Factory, after looking at the major news on Forex Factory, by your right hand side on that same Forex Factory, you see some place where it says major or related stories. Read on these things, open those tabs one after the other, read on those particular, and it takes you to different websites which you would get a lot of information from. You can get information from Twitter, you get information from Fastbull. It's also a place where you can get information. You get information from Fastbull. Then also do not desert investing.com. I tell you, these are places where I get informations from. All right. Then also, or do I say, yeah, lastly, let me move into indices, and I would start that with US 100. Now, looking at US 100, looking at US 100, the same news goes for US 100, US 30, as well as US 2000. All right. For US 100, we can actually see that for most times now since last week, this particular instrument has actually did moved up, and aside from the fact that it did moved up, early this week it has actually been coming down, and I actually expect that. Now, if you look at this my chart, you can see this particular line that actually draws across this. Now, this is Fibonacci, and we actually use Fibonacci to draw what we call retracement level. This is quick Fibonacci. Now, this is actually drawing a retracement level, and market would likely retrace at this region, which is 23.6 Fibonacci retracement level. It would retrace just the same way we have it at this particular point. It retraced at this particular point and went up, and I'm actually expecting this particular market to also come down at least to this particular region before we can actually have a further movement. All right. And for news actually affecting US 100, one, Uber stocks fell by 5.7%. Uber, of course, you know Uber now. Everybody knows Uber. So Uber stocks fell by 5.7%, and their quarterly loss, they had a quarterly loss of $37.7 billion, $37.7 billion dollars, and that's why you actually saw that it did got itself weakened yesterday. And you need to also pay close attention, because some of the different companies listed are actually releasing their own quarterly earnings now, and all this would definitely affect the market. So pay close attention to news to see when their quarterly earnings are actually being released. Fine, if some of these quarterly earnings, when being released, if it's actually good, and there's a record boom, definitely it would actually support the way or the movement of US 100. But of course, if it does not, definitely we'll have it the other way around. All right. Then aside that too, we have low job rates, and if you look at the data for job rates, we have a disappointing data for job rates, and about 175k jobs are actually being produced, which is nothing to actually write home about in relation to how many people are actually been jobless. Then aside this too, we actually saw that treasury yields, the 10-year treasury yields actually they came in lower, which is also nothing to actually write home about. Then also one the only data I actually see from US 100 that is actually more of a good data is the fact that you know Sony Pictures now, so they're actually looking at having a kind of alliance with Apollo over Paramount Pictures, and you know this is actually a very good deal. Of course, it's still in the pipeline, but once this deal comes through, definitely you and I would actually expect that markets would do more. You and I will expect the market will do more. So for today on US 100, enter for a sell at price level 18110.83, 18110.83, 18110.83, while you take your profit at 18079.20, 18079.20, 18079.20. Enter for a sell at 18110.83, while you take your profit at 18079.20. Alternatively, for a buy, enter for a buy at price level 18141.38, 18141.38, 18141.38, while you take your profit at 18168.66, 18168.66, 18168.66. 18168.66. Now the same thing goes for US 30, and for US 30 you can actually enter for a buy at 39169, 39169, while you take your profit at 39225. Enter for a buy at 39169, then you can take your profit at 39225, 39225. Alternatively, for a sell on US 30, you can enter for a sell at price level 39088, 39088, then you take your profit at 39018, 39018, 39018. 39018. All right, that is that for today on money market review. For Euro USD, just leave it. It will definitely go down. Just leave it. It will definitely go down. And for GBP USD, just leave it too. Yeah, I can actually see what is happening there. So just leave it. Be rest assured, it's a very good position as well as entry. So just leave it. All right. So we have some couple of events as regards rally trade for today. We have some couple of events as regards rally trade for today, and which tells us that we have events coming up in Ikorodu. If you are in Ikorodu, there is a seminar going up in Ikorodu, Igbogbo. Yes, that's the area, Igbogbo. There is a seminar going up in Igbogbo today in Ikorodu, so you can actually attend. Then, if you're actually closer to anywhere in Ikeja, that's our Lagos office. We have a seminar here at Adeni Jones. That's 43 Right House in Adeni Jones in Ikeja. All right, for Ibadan, we have events happening in Ibadan. Also, reach out to the office in Ibadan for the event. Then also for we have events coming up in Ondo as well as Akure at the same time. We have one in Ondo, we have one in Akure, we also have in Port Harcourt. And we also have in Abuja. Reach out to your account officers if there is anything you want us to know about. Of course, they cannot see what's happening to your account. You can actually do them a screenshot and reach out. So in case you are not clear with anything, reach out to your account officer. Thank you and do have a beautiful day. All right.